Hi guys, good morning and welcome to this Moneycontrol live stream. I'm Nandita Khemka and I'm back in the studios. It is a Tuesday morning. The cues coming out of global markets are fairly positive, although the gift nifty was hinting at a muted start. But of course, we snapped out of an 8-day winning streak yesterday. The bulls took a break after an 8-day sprint. But today it's the weekly FNO expiry as well, so expect fair bit of volatility. But let's see whether or not we can actually resume the up move that we've seen, over the last 8 sessions or not. Yesterday, of course, was a day of break. After cooling their heels, we'll have to see whether the bulls manage to reclaim some lost stocks bought in the cash market. But to understand what are the key levels to watch out for, whether we see some bit of up move on expiry day or not, let's get on board Ajit Mishra, Senior VP Technical Research at Religare Broking. Ajit, always lovely chatting with you. It's a good Tuesday morning. Global cues fairly positive, but if you look at gift nifty for cues, not poised for a great start. After yesterday's short break, would you expect some bit of a recovery to kick in today? What is the setup looking like? Can you expect 25,100 back, or would you say that we will remain will remain sideways as its weekly expiry as well today?
Yeah, good morning, Nandita. So, thank you for having me. And yes, we are seeing a bit of a pause. And Nandita, if you see that it's almost like a roller coaster ride for the markets, means we were here at this level, in the August month highs around 25, 150, and we are back to the square. Uh, this time around, we made a higher lows and we saw the recovery across the board. The two key sectors which were sitting on the sidelines earlier, like banking and IT, we started seeing a bit of attraction from both. Now the key is that banking, Nandita, which is lacking momentum due to the underperformance of the private banking majors. That would be the key catalyst for the next leg of the move to surpass this 25 150 level decisively and inch toward 25 250 or 500 in days to come. So as of now, one should keep a close eye on 55,000 mark. Yesterday, banking index did make an attempt, but it couldn't sustain. So I feel that the other sectors or themes like railways, defense, they are offering you buying opportunities in the interim. So until we see some sign of decisiveness or momentum in the banking index, this sideways tone might continue in the Nifty. But at the same time, since we are seeing rotational buying across the other sectors, the tone during this consolidation is likely to remain positive. So the focus should be more on buying opportunities across sectors which are showing a relatively higher strength. So consolidation will continue on the expiry day, but yes, the tone is likely to remain positive.
Okay, the tone is likely to remain positive. But how would you look at some of these PSU names? PSUs in particular have been doing well, and even the if you look at banks, PSU leg has been doing well. So anything that stands out when it comes to the PSU banking universe?
So certainly, because when it comes to recovery, in the heavyweights or the second rankers also, so be it Bank of India, Indian Bank is anyways trading at the record highs. Then we have SBI also, which is gradually seeing recovery. So yes, the top 4 5 names, they are comparatively doing well in comparison to the private banking heavyweights, and this might continue. Though for the PSU banking index, we are also very close to the immediate resistance. So 7150 for the PSU banking index is where we have resistance, which is just 50 points away from the current area. So we might see some consolidation in the PSU pack also. But yes, in comparison to the private banking majors, we expect this outperformance to continue. So the focus should be more on the top performers like Bank of India, Indian Bank, SBI, Canara Bank, amongst the PSU banking pack for fresh longs.
Okay, that's the view. Some of these banking names near record levels, focus in on them as well. Of course, we'll be keeping an eye out on the Nifty Bank Index as well. As you mentioned, it did make a dash at that 55,000 level, but failed to really hold on to that. But in particular, you mentioned quite a few names. I don't think you really mentioned Canara Bank. Any thoughts there? It's ARM, Canara, HSBC Life has got the SEBI nod for an IPO prospectus as well. How would you look at a Canara Bank within the mid-sized PSU banks?
Yeah, so the recovery was decent, means from 100 to 212, and that's the swing high that the stock tested last time. So we expect in case it manages to cross this barrier around 113, 114, then probably we can see the next leg of momentum, which could help the stock to inch towards record high zone, which is around 120 area. So yes, it looks comparatively better, and as I've said, one can continue to accumulate PSU bank even if the consolidation continues. So for Canara Bank, the stop is at 109. So with that as a stop loss, you can definitely look for long positions with 118, 120 as a position targets.
Okay, that's about PSU banks. But one sector that was standing tall yesterday on firm ground was the real estate pack. That index was up somewhere around 3%. But real estate stocks have seen a lot of hammering. If you look at the real estate index per se, it's down over 20% from its 52-week highs. Yesterday's momentum, would you expect that to continue? And how would you look at stocks like DLF, Prestige, even Anant Raj for that matter? That stock was up somewhere around 13 or 11% yesterday.
That's true. And like you rightly mentioned, that post the decline, a sharp decline, the reality index is also seeing some sign of recovery. But for the index, we have still multiple resistances around 920, 940 area. It's still trading below the long-term averages. So there could be a bit of a beater, after the initial up move. Among all these names, DLF definitely looks promising. Means after retesting its long-term averages, it formed a base around 740, 760 zone, and now we are seeing this recovery. So we expect this recovery to further strengthen. And for DLF specifically, 810 is what we are eyeing as the immediate target. So with stop at 758, one can definitely look to go long in DLF.
Okay, to go long on a DLF, one stock that has entered the FNO ban is Angel One, and of course, we've seen roller coaster for stocks like BSC and Angel One, especially because of the SEBI consultation paper that would have obviously come out on the longer duration FNO expiry as well. So that has been an overhang for stocks like Angel One, BSC. And now with Angel One in the ban, how would you look at it?
See, broadly, if you see, it's almost a year now that, in fact, more than that, the stock has been trading in this broader range, 2030-400. So we are again inching towards the lower band of the same. Yesterday, though, there was a marginal uptick, but I doubt that it can sustain until we surpass this 2350 barrier, which is the 20 EMA mark, for any meaningful recovery. And a break below 2150 can result in further decline towards the lower band, which is around 2000 levels. So as of now, it's an avoid. In case if we are holding any long position, 2150 should strictly be your stop loss. And in case of rebound, also you should consider reducing your position. Cause 2360 and then 2500 is multiple hurdles that the stock had to cross.
Okay, that's the view then. Just about 2 minutes to go for the markets to open. Any recommendations, Ajit, this morning?
Yeah, so DLF definitely tops the list. Post this yesterday's move, it was almost 5-6 weeks of corrective trend and then the space formation. So we expect this recovery to further strengthen, and the outperformance within the reality space is something that we are anticipating in DLF. So 810, like what you recommended as a target. So with stop at 758, one can go long in DLF at current levels. Then we have Siemens also from the capital good basket. Means yesterday we were seeing L&T and Siemens both are doing exceptionally well. Siemens, particularly, we have seen a consolidation range breakout. The stock has reclaimed the long-term averages. So all indications are in the favor that this recovery is likely to further strengthen, and 3540 is something that the stock might test in the near future. So with stop at 3220, one can go long in Siemens as well.
All right, DLF Siemens, those are some of the recommendations coming in from Ajit. But Ajit, hold that thought. First ticks coming in, and it's on the positive side. 35-point banking names continue to witness some selling pressure. So is the case for the likes of Titan. But I want to get into your thoughts on a Bajaj Finance. What do you do with the stock? It's it hit a record high yesterday, and it has been on a gaining streak for almost 2 weeks. Any levels on the higher side that you'll be watchful of for a Bajaj Finance? And is it a good time to take some profits? How would you look at it?
So yes, like from 860 to 1020, almost a vertical rise. There was marginal pause in between, but the tone looks positive, and the consolidation range, which it was experiencing earlier. So it's a decisive break, and I would say that this momentum is likely to continue. But yes, if the view is very short term, there's no harm booking at least partial profit around current area. Let the stock consolidate a bit, means in the range of 980 to 1020 in case it consolidate for a couple of sessions. Then we'll have a newer base to watch out for. But in case if somebody is okay holding it for a month or two, then definitely they can continue with their long positions with 965 as a stop loss and upside around 1080 to 1120 positionally as a target area.
Okay, that's the view on Bajaj Finance. One stock that's among the nifty gainers is Adani Enterprises. It has received a letter of approval for Kedarnath ropeway project worth 4,000 crore rupees. If you look at the counter, it has been fairly steady in the last month or so. No fireworks as such, but it has managed to give positive returns. Still at 2,400 levels. Do you expect the stock to head higher from here? Because, although the stock has clocked in gains, there is, no fireworks as such on the charts for this particular name. How would you expect it to move forward from here?
So that's right, Ananta. If you see, it's almost like 8, 9 months now that stock is maintaining this band 2200, 2600. So again, we are very close to the long-term averages. So I doubt that until we surpass this hurdle around 25, 2460, 2470 decisively, we can build on this recent up move. At the same time, a break below 2350 might negate the positive bias and put this stock again on the backward, means the consolidation might extend further. So as of now, the risk reward is not favorable for any fresh long position. One should wait for a decisive close above 2470 for fresh leg of the up move toward 2650 or maybe higher.
Okay, that's a view on Adani Enterprises. One more stock, NCC, that's seeing good traction in trade today, up in excess of 2%. It has bagged orders worth 2,090 crore rupees from the Bihar government for construction of Barner Reservoir scheme. The stock, saw good traction in the last 6 months, but I think last 1 month it once again slipped into consolidation. YTD charts are giving negative signals. Of course, it's shed 20% on a YTD basis. How would you tread on an NCC here on? Would you expect some kind of trend to be established, or would you say that these moves that we see, the news-based moves, are just sporadic ones?
See, this is what we are seeing in the stock for almost 4, 5 months. Means the struggle to cross or inch towards long-term averages is something that sellers are very aggressive around that area. So around 225, 226 is where we have the next hurdle, the 20 EMA zone. Today also, after the initial uptick, we are seeing that profit taking is merging at the higher end. So I'm not very convinced with this up move, though we are seeing decent volumes. Let the stock surpass this 226 hurdle, then only one should look for any fresh decisive trend or fresh long position in the stock. Otherwise, the sideways tone might continue.
Okay, not really convinced with the moves that we are witnessing on the charts of NCC. One more stock before we come to our queries. Transrail Lighting, it has bagged an order worth 420 crore rupees in Africa, and with this, its FY26 order inflow has crossed the 3,500 crore rupee mark. The stock saw a very good run, but it has slowed down. It has lost steam. At these levels, 803, how would you trade into this particular counter? And look at the highs. It's not very far actually from its highs, 855. It's at 801 or so. But after the pause, do you expect the stock to retest those levels, 850, 855?
So yeah, possibly yes, because if you see that stock is experiencing consolidation around its record highs while holding above its short-term averages, so it's a good sign basically. So as long as you are maintaining above 770 area, it's okay to hold the stock. In fact, yes, the momentum is missing, and that we will see once the stock surpasses 820 mark, then probably a newer high may be like 860, 870 something that the stock might test. So with the stop at 770, yes, you can continue to hold your longs. You can in fact look for fresh long positions also.
All right, that's the view on Transrail. But let's shift focus to our viewer queries then, quite a few of them. And a couple of stocks we've already discussed. So maybe you can go back in the feed and check for a Canara Bank, for instance. Shweta, we have discussed that stock. You can perhaps go back in the feed and check out Ajit's view on that stock. Same goes for DLF. In fact, DLF is one of his picks, stock recommendations. So you can go back in the feed and check that as well, Geetu, Sandesh. But let's shift focus on a query that has come in from Sandeep Poddar. It's on GMR Power. That stock saw a very good up move yesterday, backed by good volumes. Sandeep wants to know the perspective or your perspective on the stock with a 3-month time horizon. He has 200 units of the stock for the last 6 months. Over the next 3 months, what do you expect and what should he do?
So I understand means the last 6 month is like a range bound session or trade for the stock, and now at least finally we are seeing traction with the volumes which is needed, and we believe that the moment we cross 140-42 levels decisively on this, then probably we are set for the new record highs, means 165-170 levels. So definitely you should stay put. Now 120 should act as a strong base. So with that as a stop loss, positional target of 150, 160, the risk reward is favorable.
Okay, that's about GMR Power. Hold on to it, risk reward favorable. Let's look at some other queries then. There's a query on Hudco. Gnana Prakasam wants to know your thoughts on this stock for the short term. As I mentioned earlier, PSU stocks have been on a tear of late, and Hudco is also one of them. Any thoughts in the short term? How far it can go from here?
Yes, so Anta, we were seeing almost like 3 month long consolidation phase, which has finally ended because the stock was trading in a very tight range around its long term averages in the last 1 week, and yesterday we had a decisive breakout with volume. So we expect a marginal breather due to the call positioning at 225. That might act as an immediate resistance, but the moment we cross this, then probably around 240, 245 is something the stock might attempt. And now 215 is a strong base. So with that as a stop loss, yes, you can continue to hold your longs. You can buy fresh also.
Okay, continue to hold. You can buy fresh also. That's the call on Hudco. But let's talk about some of the railway and defense stocks, because railway stocks have come back on track, so to say. I had spotted a query on Concor. This one's from Alex. Wants to know the important support levels and how are some of the other stocks also looking like on the charts now. They've seen a long corrective phase. So do you think it's this renewed momentum in the railway stocks will sustain?
Yes, in some of these names, definitely means the recovery is decisive, means be it RailTel, Titagarh. Concor also we are seeing a bit of a rebound, but the first hurdle is close around 574 mark and then around 590-95. So as of now, yes, you can continue to hold your long in Concor also because the stock has reclaimed short-term averages, so that should act as a support now. So 550 as a immediate support, with 575 being the first target area, and then 590.
Okay, that's the view on railway stocks, particularly Concor. Hope that answers your query. There's a query on Yatharth Hospital that's coming from Lavansh Sarthak. This stock is close to its highs of 820 or so. The stock has given good returns. Yatharth. I think last 6 months, of course, we've seen the stock, almost double or so. Any thoughts here? If is it a fresh buy, or if somebody is holding on, should they book profits?
So trend looks positive. There's no doubt about it, and as you rightly mentioned, it has doubled in the recent months. So there could be a bit of a consolidation, though there is no sign of exhaustion yet. So as of now, yes, you can continue to stay. But for fresh buying, I would rather wait for any dip around, let's say 765, 770 area, means 20-30 points down from the current levels, because 750 is what we have the immediate base uh, as a stop loss. So 50 point in case if you're holding long position, and in case if you're aggressive traders, then you can maintain a stop at 765 also, and keep on trailing your stop losses on rise, because stock is in uncharted territory and the upside is open.
Got your point, Ajit. Last bunch of queries. Then there's a query that's come in on Hyundai Motors. Mukul Vaidya wants to know whether a fresh entry could be looked at for the next 3 months. We also have a query coming in on Ola Electric from Shweta as to whether one should look at this counter for a fresh buy. What would your advice be?
So Hyundai definitely looks promising. Means in fact the entire auto pack, if you exclude couple of names wherein we are seeing underperformance like Tata Motors, majority of the counters are either trading at 52 weeks high or trading at the record highs level. So Hyundai after this pause is basically offering you a fresh buying opportunity, and I believe that 2500 is a very strong base. So with that as a stop loss, one can continue to hold longs. You can buy fresh also. The moment we cross 2620, then we'll see the next leg of the up move, which could help the stock to reach towards 3000 plus levels. So yes, you can go for long. Ola, in the last two trading session, we were seeing bit of a recovery. The stock has reclaimed its averages again, but I'm not very convinced because it was almost a vertical rise, from 40 to 70. So it should spend at least some time around the current area before we see the next strong directional move. So a base formation is likely in the range of 56 to 62. Uh, Existing position, you can hold with the 58 as an immediate stop, and around 62, 64 levels, you should try to book some profits.
All right, that's the view on Hyundai Motors and Ola. Hope that answers your queries. But with that, we've come to the end of the query segment. If we couldn't take up your queries, don't worry. Send them in tomorrow. We will get them addressed because of lack of time. We couldn't really take up all the queries today. But with that, Ajit would like to thank you, as always, for joining in, sharing your thoughts, sharing your recommendations, and also helping our viewers navigate their queries with respect to stocks. But thank you, Ajit. Have a great day, and I hope to connect again sometime soon.
Certainly. Thanks.
Well, then that was Ajit with the market technicals. Sure. Markets are picking up steam, up 50 points on the Nifty now. We've reclaimed confidence. Super Pro, where serious investors stay ahead. Download the Moneycontrol app and subscribe to Super Pro today. Well, with that, from me and the entire team that put the show together, thank you for watching. Have a great trading day, and we'll see you at 3:30 p.m. with closing bell. Don't forget to tune in. Have a good day.